The presenting partner of this podcast is Real Estate Industry Partners, providing agents and their clients the most up-to-date property data.
If you've got a really great landlord and you're paying under market rent for your rental property, then rent vesting and taking advantage of negative gearing can really put you in such a advantageous position.
Welcome to Future Fit Leadership, a podcast for emerging, experienced and executive leaders to build community, grow capability and future focus their career pathways. There has been a global shift in how we lead, and our conversations with leaders and executives explores the skills, strategies and mindsets that is needed to thrive in this ever-evolving landscape of the future. So whether you are a seasoned executive, an aspiring leader, or simply curious about the future of leadership, we are here to give you practical insights to unlock your potential, change the status quo, and break open our assumptions on how work works. Produced in partnership with Future Leadership, a capability ecosystem for boards and executives, Future Fit Leadership is your place for bite-sized learning for executives hungry to make a change. Nerida, welcome to Behind the Numbers Property Wrap. Great to have you and your team share your insights on the economy and property market over the course of the year. We'll be coming to our listeners on a monthly basis. But I want to start with the inflation figures because according to the RBA measure, it has gone down slightly and I think we're all hoping for a rate cut. What are your thoughts on that?
Yeah, I think a lot of us are hoping for a rate cut. At the moment, the market is pricing in around a 75% chance of a cut in February. So it's looking better than it has for quite some time. As you said, the inflation numbers are the one, obviously, that they're looking at very closely. Our Reserve Bank does target inflation in terms of what they do with interest rates. When we look at the headline numbers, they are within their band of between 2 and 3%. But at the moment, they are looking more closely at an alternative measure which takes away a few of the volatile elements out of the inflation number. So they're taking out fuel prices. Obviously, fuel prices are quite choppy at the moment. They're also taking out electricity, which has been impacted by the federal government scheme to provide everyone with a rebate. So they've taken that out, and that has reduced now to just above 3%. So that measure is just above 3%. Headline inflation is now between 2 and 3%. But yeah, I think a lot of people are hoping for a rate cut. We're not sure if it will happen, but there is a high probability.
If you're a betting person, you probably bet for a rate cut in February, would you?
Look, at this point, I'm saying yes, there will be a rate cut. The big challenge, though, for the remainder of the year as to whether we will see more cuts is that there is a lot of global uncertainty, and Trump in particular is quite volatile in terms of his decision making. We're not we don't trade a lot with the US. They're not one of our major trading partners, but China is, and China is being threatened by very high tariffs. Those high tariffs probably won't come through at 60%, which Trump is claiming, but even at a much reduced rate, it will lead to inflationary pressures around the world. And obviously that has implications for our interest rate outlook. So there's a lot going on and it's really hard to judge. But again, when, there's many ways that you can look at forecasting interest rates. You can build models, you can you take a view based on the data that's available to you, or you can look at market expectations. And I think for this, at the moment, market expectations are probably the best measure. And based on that, we are expecting to see 3 to 4 cuts this year. But we know too that things can change very, very quickly depending on what data is being released and what policies are put in place.
Given this is our first and an early conversation for the year, what do you see as the outlook for 2025? And I know this is a bit of crystal balling, but I wouldn't mind, talking about that economic growth. Where do you think we'll end up sitting, particularly around that, and also with the impact of what's happened with the US elections and potential tariffs as well?
Yeah, so at the moment, Australia is we're in a pretty fortunate position. We haven't gone into recession. We did see a lot of the rest of the world go into recession. We do have room to move with interest rates. If you have a look at what's been happening around the world, again, a lot of countries have had to cut quite quickly. New Zealand being a really good example that they did go too hard on their interest rate increases, and have had to, went into recession, have had to cut very rapidly. Quite a different situation to us. We've got very low unemployment. I think, that's obviously a good outcome in terms of, even though we are seeing cost of living pressures, most people aren't particularly worried about losing their jobs. And so I think that's good for consumer confidence. But it is, the outlook is pretty uncertain. I mean, I mentioned earlier around Trump, we don't quite know what the implications of that are. At the moment, there's a lot happening with green energy, and that's causing price increases, but it's also causing very high demand for a lot of our green energy minerals. So very, very good for WA. Iron ore is a little bit uncertain. The pricing of that seems to be going down quite significantly. And then of course we have migration. So Australia is, we are a growth economy because we do allow a lot of people to come into Australia. We're very desirable in terms of a country to come into. If we do see caps on migration, it does have implications for our education sector. So that's that is a big contributor to economic growth in Australia. It also has implications to a lot of industries, and we probably talk about it today because it is such a big one for the property industry, but definitely the construction industry is still suffering from labour shortages. We know hospitality is also suffering. So, on one hand, we need migration because it helps with our economic growth. We need people to build homes, but then of course, when people come to Australia, they need somewhere to live, and we do have a housing shortage at the moment.
It's interesting you mention about, in particular, the hospitality industry. When I was having some conversations with some cafes and restaurateurs in country Victoria, and asking them why they weren't open for longer hours, thinking, don't you understand this? It's summer holidays and everybody's down here, and you should be open for my cup of coffee. And they were like, we can't get staff. We actually physically cannot open our doors because we've got no one to run the business for us. And when you hear it at that ground level, you really start to understand the impact that, things like migration, the flow through effect has all down to the coffee shop in country Victoria as such, that can't serve you coffee on a Sunday afternoon because they don't have staff.
Yeah, and I think too, it also is really relevant for the aged care sector at the moment. The aged care sector is, it is a growth area. Australia is aging, but we do need staff to look after that sector, and a lot of them are recent migrants. And if we do cut them off, then cut that level off, it does have implications for our health sector as well. So yeah, I think it's, people look at it quite simplistically that, there's lots of people coming here, we don't have anywhere for them to live, and it's forcing up house prices, but not really recognizing the fact that there's a lot of industries that just can't function properly if we don't allow particularly skilled migration into the country.
Childcare is the other one,
Yeah.
From a personal thing. So many women are not going back to work because they can't get childcare. And yet, if we got skilled migration in for that, we might be able to offer more places. Leading into the Australian dollar, it's not performing as well as we would hope at the moment. And our personal reasons, again, I'm going to Europe in halfway through the year, and I'm like, no, the Australian dollar is going to get it much stronger. What are your thoughts on where we see that landing?
Well, we don't have much control over our
No.
dollars. So, it is one where at the moment the US economy is going into overdrive. So that significantly weakens our dollar as a result. In terms of where it's going, forecasting exchange rates are really, really hard. But, I think the likely outcome is that the US economy will be strong this year. Trump is very pro-business. He's very keen for things that do lead to, perhaps overheating of that economy, which will continue to lead to a strengthening dollar. He said he wants to weaken the dollar, which, would be very hard for him to do, because what he's wanting to do is to try and prop up the manufacturing sector in the US. So he's come out and said he wants to weaken it, but at the same time, most of his policies strengthen the dollar. So again, I think there's a high level of uncertainty this year because, on one hand, we have him saying he'll do one thing, and then on the other hand, he's sort of doing contradictory things, and it does make it very difficult to try and forecast as a result.
Coming back into Australia with the government policy changes on housing affordability initiatives that they've put in place, tax reforms, how do you think these will impact? Particularly, we've got an election coming up as well. So are we sort of going to see more reforms around this
particularly around the green energy piece as well. So many houses in Australia don't have the energy rating that we should have. We've got the affordability issue, tax reforms, we've got an election coming up. How do you think all of this will impact the property market?
Yeah, I mean, housing affordability is such a challenging thing. We know, I mean, I think one of the important things that's come out in recent years is the importance of housing supply. I remember talking about housing supply and how important it was, 4 or 5 years ago, and really being shouted down. But, it has now been recognised that, if we build enough homes, particularly where people want to live, it does lead to more affordable housing. At the moment, the federal government, they're right in setting a target of 1.2 million homes. If we could achieve that, it would be a really good outcome. I think, though, what the reality is that there's just a lot of other challenges to get there, and it's not an easy solution of just building homes. Construction industry in particular is very challenged. Construction price increases are starting to moderate, but we're certainly not seeing a fall in WA. We have actually seen a re-acceleration of construction prices. When we have a look at green energy, we do know we need to shift to green energy, but at the same time, there is going to be a period of disruption in terms of the rising costs across a range of industries, and construction is one of them. For example, in WA, they do rely heavily on brick construction. You need gas to fire bricks, so that does lead to increases. We have labour challenges, as we've spoken about, and then there's also a question around where the money for all these homes is going to come from. And this is what no one's really answered it, because if we have a look at the last time that we got to close to 1.2 million homes, we got to about 1.07 million homes, was the end of last decade, and that was a period at which we saw incredible levels of investment coming out of China, and we saw Chinese developers here. We saw a lot of Chinese buyers, a lot of individuals buying property, and it really did spark an incredible level of development across the country. So that money has gone; it's not coming back. So where are we going to find all these funds? And obviously, government can't pay for it. They don't have any money at the moment. We know that foreign investors aren't interested. Interest rates are high, so it's hard to get a lot of investors in. So there's just a lot of questions around, well, in the end, what can government do to hit that 1.2 million? They can really only control planning, and town planning has been sorted out in a lot of states to get things built. So that's absolutely being done, but there are all the other issues around money and construction, which and labour force, which are really, really hard to sort out, and which are really slow to sort out as well.
Let's talk about each of the states and how they're performing, metro versus regional as well. Let's start with Sydney and Melbourne. What are you seeing, given, I mean, we've only a few weeks into the year, but what are you seeing around the markets, particularly in Sydney and Melbourne?
Yeah, so I'll start with Sydney. I mean, it definitely has slowed. We're not seeing price declines across Sydney. I mean, we know there's obviously places that are seeing price declines, but we're basically seeing around 2% per annum growth at this point. So it is very, very slow. What our data is showing is that it's really the top end of the market that seems to be slowing the most. And, when we talk top end, sort of top 5%, probably sort of 3 to 4 million plus. Definitely people at that level are struggling with higher mortgages. That it does seem to have hit a limit to people's affordability. But when we have a look at cheaper properties, we're seeing still fairly decent price growth. So it is very, very uneven depending on what type of property you're looking at in Sydney, and particularly what sort of price point that you're looking at. Apartments are looking quite different. So this isn't just in Sydney, it is in Sydney, but it's also nationally, that when we have a look at the apartment market, the top end of the market is doing quite well. And a lot to do with the fact that downsizers are still active. If you fully own your home and you're selling your big family home and wanting to go into an apartment, you're not relying on interest rates, you're probably fairly cashed up. And so as a result, that end of the market is doing pretty well. But where we are struggling to see much growth, and we're struggling to see also much supply, is that cheaper end of the market, which is that affordable end where we really need to see more development taking place. Melbourne is very weak at the moment, and and there's some alarming signs in Victoria actually. I mean, we don't quite know if Victoria's in recession, but it's quite possible it is in recession. When we have a look at house prices, which we can get very accurate data very quickly, we can see prices are flat or falling depending on what measure you're looking at. When we have a look at the number of rental properties, we've actually seen a reduction in the number of rental properties. And then when we have a look at rental growth, it's actually really strong still in Melbourne because of that. So we've got affordability, which is getting better for buyers, but rapidly getting quite worse for renters, and a lot to do with government policy. I mean, we have seen additional taxes put on investors, additional levies being put on homeowners. The government has very, very high levels of debt, which they're struggling to deal with, and the property industry does come under fire is coming under fire as a result, but also causing a lot of distortions in the market as well.
What concerns me about Melbourne is that we don't seem to have any easy answers around how to fix it at the moment either. It seems a bit of a guessing game. So see where we land on that one.
Yeah, absolutely.
And what about the other states? Are we seeing any growth in places like Perth or Brisbane?
Yeah, Perth is really different. I mean, look, it has slowed. I mean, we've seen across Australia, we've seen growth slow, but Perth was running at 25% price growth in June last year. It's now running at 21. So, it's certainly it's not collapsing or anything, but the rate of increase has certainly slowed. Rents are still moving pretty quickly. So, that's at a kind of similar rate to what we're seeing in Melbourne at the moment. So migration does seem to be playing a role. There's not enough properties in Perth, but also I think a lot of catch up that's taking place. If you have a look at what happened to Perth over a prolonged period, prices really didn't move and in fact fell, but now the city is really back on its feet and doing pretty well. Brisbane is quite similar. Also, we kind of look at it southeast Queensland as kind of a whole area now, because it is all behaving, quite differently to other parts of the country in that it is a net attractor of people. Gold Coast median is now higher than Melbourne's median. So, that's kind of a unusual situation, but also that we didn't see such a big adjustment in those markets once interest rates start to increase. I think, there was a view that part of Australia would stop seeing high migration levels, prices would fall back, but it has remarkably changed in terms of what's been happening in that market. But you're definitely still strong, still seeing a lot of people moving up there. Not enough development taking place, but still quite affordable. I mean, Gold Coast isn't affordable, but if you have a look at Brisbane now, it's still, the median is still, I think it's only about 800,000 or 900,000. If you look on the fringe of Brisbane, places like Ipswich and those island areas that are out east, they're pretty cheap areas, which is hard to find in bigger cities, particularly in Sydney and also in Melbourne.
And the last two being Tasmania and South Australia. Yeah,
so Tasmania are very, very weak. That's actually the weakest one in the country. So prices are actually falling there. Different dynamic to Melbourne. It is really driven by an abrupt slowdown in population growth. So it was a city where a lot of people were moving to, but the median now is below Adelaide, and it's the whole kind of market. Well, the price rankings across the country have really changed quite significantly. Adelaide is very, very different. So the South Australian economy is doing very, very well. Premier is very popular. He's done a lot for migration. He's done a lot for tourism. There's green energy mineral projects going on throughout regional areas of South Australia, copper in particular. Agriculture is doing well. So really not a lot to be negative about in South Australia at the moment. Not as strong as WA, but it is. And also I think one of the things that does make it attractive is it's affordable. If you have a look at the median, it's half that of Sydney, but at the same time wages aren't half that of Sydney. So it's, it does make it a much more affordable city for people to move to.
Interesting landscape around the country as we move into the year, and if we get interest rate cuts, to see how that impacts all the different states, given it's such a diverse market in the country at the moment.
Yeah, absolutely. I mean, I think what was interesting at the end of the year, we definitely saw a slowdown across the country, but, a slowdown from 25 to 21% is quite different from, one that's going from 7 to -2%. So it's been interesting. Like you said, interest rate cuts will make a difference. Research that we've done has shown that Sydney and Melbourne are the cities that have historically seen the quickest and most significant increase in prices following a rate cut. So, that's what's happened historically. I think this time around it will provide a boost to places like WA because prices now are so much more expensive. That does seem to be the main driver. When you do have a high median and rates are cut, it does lead to a boost because it does lead to people being able to borrow more than they otherwise could.
I want to shift offshore again, Nerida, and talk about the heartbreaking fires that we've seen in LA and the devastation. And I don't know about you, but some of the images that have come out of there, you just wonder how in the world they're ever going to rebuild. But it's also brought climate change back onto the table for, discussion. And you recently wrote a piece around the impact bushfires have on certain zones and properties. And, we've seen our own fair share of bushfires in Australia, and not only bushfires, but floods. And the 2017 floods in Brisbane was an example of that. So how does all of this impact recovery? Particularly, if we look at Australia and you look at LA, the devastation in LA has been huge. And I was thinking about this the other day. To rebuild, is that potentially going to overstimulate the economy? Because you literally have to rebuild everything, roads, homes, and you think about everything that goes into building a home, then everything that goes inside a home. Is it a huge stimulation for that economy?
Yeah, it is. I mean, it's such a big topic. I mean, that was when we wrote the piece on the impact, you kind of think, oh yeah, well, for sure it'll lead to a drop in prices and, that's probably the main impact, and rents will probably increase because there's fewer homes. But I suppose the first point is, what is the impact on property values? And what we found was that prices definitely drop following the natural disaster. But then once rebuilding takes place and once everything starts to recover, prices generally get back to where they were between 12 and 24 months. But there are a lot of variables that can make a difference. And one of them is insurance, how much insurance people have, how wealthy they are. Wealthy areas tend to bounce back quicker. Government response if roads are built more quickly, or there's measures that take place that lead to, fire or flood being averted in the future. That does also make a difference. Demographics, so not just wealth, but also age. Areas that have older people do seem to bounce back better. Perhaps they're a little bit more, likely to stay in the area because they've been there for so long. There was just a really wide range of factors that contributed to how quickly, and also how homes are rebuilt. I mean, if you have a look at LA, I mean, it's obviously too early to tell, but if insurance is paid out, then the homes that are built are likely to be better. They're likely to be more fireproof. There's going to be a lot that's done to really prevent something similar happening again, because it does, it's obviously so devastating. One of the things, though, around climate risk is that, it does seem that people don't really price it in at this point. And, there will be a tipping point. I think the tipping point will be how much insurance is. But if you have a look at the areas that have seen natural disaster, prices bounce back quickly. In most places they bounce back pretty quickly and often far exceed where they were after about sort of 3 or 4 years. And good example is Brisbane. The flooding there certainly didn't put people off riverside areas. They do still remain the most desirable parts of that city. If you have a look at places that have seen bushfire, Malakuta was a really good example that bounced back really quickly, and then COVID happened, and then people were moving to regional areas, and so pricing really took off at that point. But I think what it does show, people do love to live near water. They love to live near bush. At the moment, insurance premiums, would be a concern. I think there's some areas that are now priced too high for people to even insure their homes, and obviously that would make a difference. But for most people, it's not really a driving factor. But obviously it will at some point, because insurance premiums are going to continue to increase, and particularly we do continue to see these major disasters taking place.
I wonder if insurance prices will increase in Australia given what's happened in LA.
Yeah, I don't know actually. I mean,
Interesting to
there has
see.
been discussion that they will, but yeah, hopefully not,
Yeah,
because
yeah.
you did mention about economies, and
Mm,
it does drive economic growth. I mean, it's a terrible thing to say, but it does drive, as you said, road reconstruction, home construction, and the like. But it also does create capacity constraints, and
yes.
we're still seeing that in Brisbane. That one of the reasons we haven't seen the level of home building taking place in Brisbane that's required is that a lot of the labour has been utilised to try and do other things, and one of those other things is rebuilding flood affected homes. So it definitely creates capacity constraints, which in a construction industry, when the construction industry is already at capacity, it does create a lot of challenges.
Be interesting to see what happens and how they do that in LA, because the devastation is at such a large scale. It's incomprehensible. It's like a war
Yeah,
zone, really, isn't it? At the
devastating.
end of the day. Yeah. So let's look ahead. What do you see as the biggest opportunities for property investors in 2025?
It will be an interesting year. I suppose the big one will be that, once interest rates start to fall, that will make it a bit easier. I mean, we do need more property investors. We need more rental properties. So, it's really important that they get back out there. But at the moment, it is quite difficult. So in terms of opportunities, I still think sort of northern New South Wales, southeast Queensland is probably one of the major ones. We know that people are continuing to move up there. We're basically looking at the area from extending from Byron Bay up to Tweed Heads, Gold Coast, Sunshine Coast, Brisbane. That whole arc of homes and housing is really where we do see long-term opportunity. Perth, I think, it is a market you do need to be careful in, because it has had a history of being a bit of a boom-bust market. It's doing okay, but I think, do be really careful if you are looking at that area. And then Melbourne, there are people, we saw at the end of last year, we did start to see a few investors, well, not a few, there was a few like interstate activity that we could see from our auction data of people buying in Melbourne. But Melbourne will bounce back, but I think, as you mentioned earlier, we're not quite sure when that will be, and we're also not sure what can be done to really improve the economic situation of the state. So that it's probably a long-term option, but definitely one I think a lot of people are looking at the moment.
Is there anything that concerns you about where we are at the moment, particularly around the property market?
The level of dissatisfaction amongst young people around housing affordability, I think that's really concerning. And then I also think one of the things that also concerns me is the level of helplessness that a lot of young people feel around buying a home. And it's not, I think a lot of young people feel that they can't get into the market unless they have parents that will give them some money. And we know that's not true. I mean, people in the industry know that you can buy affordable property. There are a lot of government incentives out there. Rent vesting can be super profitable. If you've got a really great landlord and you're paying under market rent for your rental property, then rent vesting and taking advantage of negative gearing can really put you in such a advantageous position. And I think that messaging is not coming across. If you open the Sydney Morning Herald, or you open any media publications all around, young people can't get in, it's not possible, you need to get money from your parents, if you don't do that, you can't get in, you're locked out forever, you'll be 80 when you buy a home. And it's just such impractical, unhelpful messaging at an individual level. It does bring to the fore that we do need to look at affordability, and we do need to build more homes, and we have a problem here, but at the same time it doesn't really empower people to try and work out ways to get into the market and to buy a home, because we know how important buying a home is, and really starting to create wealth at a younger age.
And this will be quite central to the election that we've got coming up this year. And you just said there's a lot of young people who are unhappy. Affordability is a huge issue in this country. We're not getting the right answers. We're not getting the right conversations that are being had. So it will have a massive impact on the election this year, I imagine.
Oh, absolutely. I think the concerns around rental affordability are sort of starting to calm down because rents aren't growing at the same rate that they were. But yeah, housing affordability, we know that Australia is one of the least affordable countries in the world, but it does need to be solved. We know that housing supply is the critical one, but also, I think it's a lot around first home buyers. We do need to communicate ways that they can get into the market. And I think that for me, I feel is the missing piece, that there's just not that good communication to young people to say, yes, they're expensive. Yes, it's hard to get in, but, this is the way you can get in. And I think that's if that's done this year, I'd be pretty happy.
Nerida, thank you for your time. I look forward to our monthly conversations with either yourself or your team members, bringing in market updates every month. And I'll see you next month.
Thanks for having me.
If you like what you've heard, please share, rate and review this podcast. And don't forget to share it with anyone who might benefit from hearing it. The producer of Future Fit Leadership is Maritza Barone from Guide Your Light Network. If you would like to reach out to me, please DM me on any of my social media platforms. I'm available for speaking at conferences or consulting to your business. Future Fit is created in partnership with Future Leadership, a capability ecosystem for boards and executives. If you'd like to join the community and receive a free takeaway each week, sign up to the Future Exchange app in my show notes. Thank you for having me in your space.
This is a Guide Your Light Network production, creating podcasts with purpose.